Good day, all. Ira Epstein of Linn and Associates with your metals market wrap-up, and this is for actually Tuesday, September 3rd, 2019. The problem is it's just getting on to 5:05, so they just reopened for the Wednesday trade session. I want you to appreciate what I'm saying. So these are now the new trades coming in for the Wednesday trade session. The hardest part on a day after a holiday is what do you do with certain parts of the cycles? You know, a 5-day week entitles certain things. I have a lot of different, how do I say that, technical indicators, technical rules that I pay attention to. You can't count a Monday like a big move and say I'm getting a Tuesday reversal, and we talk about that often. Doesn't work because you're into Tuesday already. Gold acting good, but silver better than gold, and I think you even see that at the end here. Copper market, you know, if the U.S. and China don't talk, where are you going on that? The stock market had a big decline, some short covering late in the session today. However, you're still down tonight. So when we come to the chart, we see that the weekly chart of closes, this is the best close that we've had in gold in years. This is just a very solid move the market's had. It's almost straight up if you consider it's gone from the most recent low close of 1275. I can go lower here into April, but I considered that the launch point because from there it finally got over the 18-week moving average of closes, and it's just never looked back. So the bias turned up and this market's run with it. When we look at the current price action, as friendly as prices are, you've run into a resistance zone here for about a week and a half now. This 1256 zone is giving the market some problems. When you look at where the swing lines are, you have lower highs and you certainly have lower lows. I'm going to say that the swing line downtrend, let's take a look and make sure I'm right here, 1559.80 was that high, and you have not been able to take that out. You got to 1558.90 today, and you've backed off. Now let's assume it's taken out. You'd still end up with a pattern of a lower low and a higher high. Not the cleanest chart there is out there. When we look at where support is, I'm going to say it's back towards the 18-day average of closes. Came down there, held it, rallied nicely, but hasn't been able to run and break out of this just yet. I want you to look at this black dashed line. It's a resistance line that's developed from an algorithm called a Bollinger Band, which is designed to keep prices within it 95% of the time. Can the market step out and run? It certainly can, but it's more common that it doesn't when you get sideways action like this rather than this bit broader action. Now this isn't super broad, it's not as wide as it was out here, but it's still that type of action. It's not the typical narrowing action. So I'm still going to see support back 1529.30, and I'm guessing, I got an itch there, towards this 1560.50 area. In terms of momentum, I'm overbought. Well, the market is, not me. The market is overbought. Any reading in the slow stochastics where either of the numbers are in 70s and they're both not going sideways over 80 is considered by me to be, what I teach in my charting course, overbought. So I have a market that's at a resistance point. It's overbought, had a nice rally today, but couldn't take out previous highs. There's nothing bearish that I'm saying. That's the point, though, of the market. GLD is much friendlier than the futures. You've got the higher lows, the higher highs. It too, though, has gotten to that upper Bollinger Band and magically ran out of momentum against it. It is an overbought market in an uptrend. Support, I would estimate back at the 18-day average. What you don't want to do is get under 140,300. That could cause the market with those that are bullish to maybe get worn out a little bit. Resistance, still that upper Bollinger Band. GDX joined the bull parade recently. It's continuing up, and it too is fighting at that upper Bollinger Band. And when you first hit that Bollinger Band, after backing away from it, it's often, not always, often a spot that pros take some money off the table. And I'm assuming they're long if the bias is up and you're up there. It could be a terrible assumption, I realize, but that's how I have to assume it as I'm looking at what I teach. The gold-silver ratio, I told you when this thing started getting through this area, watch out. And once it started streaking, it hasn't given up, and that's this silver market, a complete different looking chart than gold. Embedded, which is a very strong reading. Ahead of itself, absolutely. If you look at today, you closed over the upper Bollinger Band. On Friday, you finished at 1834.20, which was under it. So all I can say is it's over the band. You had your correction back under it. You're over it. You might play around it again. This rules the day, though. In the hierarchy of technical indicators, and I have a hierarchy that I look at, that's number one when you have an embedded reading. Lose the red line over 80, closing under 80, then I'll look for price and the 18-day average to try to make a run at each other. Copper market, failing each time at that 18-day average of closes, and it's an ugly chart. It tries to mount rallies to knock you out of your short positions and probably succeeds in a way for that for a lot of people. Gets up to that 18-day average and just miserably fails, goes back to the Bollinger Band, doesn't seem to get follow through, and bounces. You're not getting a clean pattern. That clean pattern ended with this formation when it went right here. That was the end of it. The first challenge of that Bollinger Band, you haven't really gone anywhere since then. In the platinum market, it's like, hey, did you guys forget about me as a precious metal? And up and away it's going. Now, I am concerned about it because we have 1 day, 2 days, that's over the upper Bollinger Band, over and over, not here. So you really typically don't close more than 5 in a row over it. You can, there's no magic to it, except if you go back on your charts and you count how often that occurs. Now, when markets streak like this, they don't just come typically crashing down either. So it is a sign of strength. And what pattern did this all happen from? This is why I like to point these out. This is pretty much sideways pattern. You were narrowing in the Bollinger Bands, you challenged it there, and then once you let go, you were gone. But during this whole time, you had higher lows, higher highs. I do think the pros took some money off the table at 872.30. And what they did here, I can't answer because it just has been running on it. But there's certainly not been a reason to be short. The palladium market has played some catch up with the rest of the markets. The market has suddenly picked up its own strength. That all happened, if we take a look at it, on Friday, and it held most of that strength now. In fact, let's make sure, yeah, Friday, and here's Tuesday's action. So not a bad action day at all. Last, the dollar index, well, it's been on a tear. It hasn't had a lower low day in 6 business days. It's due. It'll come out of nowhere when you least expect it. Certainly the market's new contract highs, trying to fight it, very difficult, not favoring U.S. business. Strong dollar can shut off exports. A strong dollar makes our grains, our export markets, and many products that much more money. But it's there for a reason because everybody's doing so poorly. I talk about this, exactly this, and much more in my market research. And twice a day, I write a market report. Twice a day in the fall through the winter, I typically put out an evening oral and morning oral update. And then, of course, my morning video. So I'm busy throughout the day. That's besides all the interviews and so on that we give here. And we've been fortunate. People pick up on what we do and they like it. That doesn't mean everybody does, and it certainly doesn't mean the trading walks on water. But it's the kind of research that a lot of people like, that a lot of traders can relate to. If you haven't tried it, it's the full package. You get our charting software, you get our mobile app if you haven't done this, you're going to get my updates, you choose what you want, you get the Linn research. It's quite a bit because we want your business. It's that simple. How do you get it? Simple. Go to our website. It says free trial offers. Click on it. You can call my staff in the morning. They can get you set up in 5 minutes, max. Right here, if you click this, it'll take you to the free offer page as well. In the meantime, I'm going home for dinner. You have a great night, and I will talk to you all first thing in the morning.